What if your crypto wallet didn't just store your money, but actually managed it for you? Imagine opening your wallet and instead of manually checking prices, gas fees, and market volatility, an intelligent system has already analyzed everything, protected you from a suspicious contract, optimized your transaction timing, and rebalanced your portfolio while you were asleep. This isn't science fiction. AI agents are quietly transforming crypto wallets from passive storage tools into autonomous financial assistants. And this shift could completely redefine how we interact with digital money. So the real question is no longer how do I use my crypto wallet? It's can I trust my wallet to think for me? For years, crypto wallets have served a simple but powerful function. They store private keys, enable transactions, and allow users to interact with blockchain networks. In the early days of cryptocurrency, wallets were primarily static tools. They acted as digital vaults, secure, minimal, and reactive. Users had to manually initiate every action, from sending tokens to approving smart contracts. The wallet waited for instructions. It did not think, decide, or optimize. But according to a recent analysis published by AI Journal, that model is beginning to change dramatically. The next generation of crypto wallets is no longer just storage infrastructure. It is becoming intelligent. AI agents are now being integrated into wallet systems, transforming them from passive tools into active financial assistants capable of analyzing data, executing strategies, and even making autonomous decisions. This shift signals something much bigger than a technical upgrade. It represents a transformation in how digital money is managed, accessed, and optimized. If traditional crypto wallets were digital safes, AI-powered wallets are becoming financial co-pilots. To understand the significance of AI agents in crypto wallets, we must first examine the limitations of traditional wallet systems. Historically, wallets have focused on security and access. They protect private keys and allow users to sign transactions. However, they provide little guidance. They do not analyze risk exposure, track portfolio volatility in real time, or suggest strategic moves. Every decision depends entirely on the user's knowledge and awareness. AI agents fundamentally change this dynamic. Instead of waiting for commands, they can monitor blockchain activity continuously. They can analyze price trends, gas fees, liquidity pools, and smart contract risks. More importantly, they can respond automatically to predefined objectives. For example, an AI-enabled wallet might rebalance a crypto portfolio when market volatility crosses a certain threshold. It might automatically move funds to safer assets during extreme downturns. It might even optimize transaction timing to reduce network fees. This transformation shifts crypto wallets from tools of access to tools of intelligence. The wallet becomes proactive rather than reactive. And in a fast-moving digital asset market, proactivity can mean the difference between loss and opportunity. AI agents in this context are software systems that combine machine learning, data analysis, and automation. Unlike basic automation scripts, AI agents can adapt and learn. They process massive datasets, detect patterns, and refine their strategies over time. When embedded in crypto wallets, these agents operate within predefined permissions, executing actions aligned with user goals. For example, an AI agent may monitor decentralized exchanges to identify arbitrage opportunities. It may analyze on-chain metrics to detect unusual activity. It may flag suspicious transactions that resemble phishing attacks. Some agents can even interact directly with smart contracts, executing complex DeFi strategies without constant manual supervision. This is particularly significant in decentralized finance, where opportunities and risks move rapidly. Human users often struggle to monitor markets 24/7. AI agents do not have that limitation. They operate continuously, analyzing and reacting in milliseconds. However, this also raises important questions about control and trust. If an AI agent can move funds autonomously, how much authority should it have? And how can users ensure that these systems act in their best interest? One of the most compelling arguments for AI-driven crypto wallets is enhanced security. The crypto ecosystem has long faced threats such as phishing attacks, malicious smart contracts, rug pulls, and social engineering scams. Traditional wallets rely on user vigilance. If a user signs a malicious contract, the wallet cannot intervene. AI agents introduce a protective layer. They can analyze transaction metadata, evaluate smart contract risk profiles, and compare behaviors against known scam patterns. If a transaction appears suspicious, the AI system can issue warnings or, in some configurations, temporarily block execution pending user confirmation. This shifts wallet security from static protection to adaptive defense. Instead of simply guarding private keys, the wallet actively evaluates risk before execution. In a space where billions of dollars have been lost to exploits, this evolution is not just convenient, it may be essential. Still, the integration of AI into security frameworks introduces complexity. AI models are only as reliable as the data they are trained on. If threat landscapes evolve faster than model updates, blind spots may emerge. Thus, AI-enhanced wallets require continuous training and oversight. Beyond security, AI agents redefine how users manage digital assets. Traditional portfolio management in crypto demands constant monitoring. Prices fluctuate rapidly, liquidity conditions shift, and token performance varies widely. Many investors lack the time or expertise to optimize holdings continuously. AI-enabled wallets can track portfolio distribution in real time and rebalance according to strategic rules. For example, if a portfolio becomes overly concentrated in a volatile token, the AI agent can redistribute assets to maintain target allocations. It can harvest yield opportunities across decentralized platforms or automatically reinvest staking rewards. This brings crypto portfolio management closer to robo-advisory services in traditional finance, but with decentralized execution. It reduces friction while increasing efficiency. However, automation also means delegating judgment to algorithms, and that delegation must be carefully structured. The rise of AI agents within crypto wallets reflects a broader shift in digital money infrastructure. Payments, lending, and identity verification are increasingly driven by AI tools. Wallet intelligence is simply the next frontier. If wallets become intelligent interfaces, they could evolve into comprehensive financial hubs. They might integrate budgeting insights, tax calculations, compliance monitoring, and predictive analytics. Instead of separate apps for trading, saving, and spending, a single AI-powered wallet could orchestrate all digital financial activity. This convergence raises both opportunities and concerns. On one hand, intelligent wallets can democratize sophisticated financial strategies. On the other hand, concentration of intelligence in wallet providers introduces systemic risk. If AI logic fails at scale, consequences could ripple across entire ecosystems. With intelligence comes responsibility. AI-driven wallets operate on sensitive financial data and autonomous decision-making authority. Regulators may demand transparency in algorithmic processes. Users may require explainability before trusting AI to manage assets. There is also the issue of bias and unintended consequences. If AI agents prioritize certain protocols or strategies based on historical data, they may reinforce systemic imbalances. Additionally, questions arise around liability. If an AI agent executes a strategy that results in loss, who is responsible? The user, the developer, or the wallet provider? As AI and crypto intersect, regulatory frameworks will likely evolve. Transparency, auditability, and ethical design will become essential pillars of innovation. The integration of AI agents into crypto wallets represents more than technological enhancement. It marks a transition from user-driven finance to algorithm-assisted finance. Wallets are no longer static repositories. They are becoming dynamic decision support systems. This evolution could make digital money more efficient, more secure, and more accessible. It could reduce human error and unlock advanced strategies for everyday users. But it also introduces new layers of complexity and responsibility. As AI continues to reshape financial systems, crypto wallets may become the clearest example of how intelligence transforms infrastructure. What once stored keys may soon manage wealth. And in that transformation lies the future of digital money.